Hi everyone, it's Brett here from Metropole. Well, what an incredible year it's been for property prices around Australia. And major capital cities have seen upwards of 15 to 20% growth, and there's even more growth predicted over the next 12 to 18 months. What has caused this once-off type event that has seen property prices soar with no end in sight? Rewind 12 months and we're supposed to be losing anywhere from 20 to 40% of our house prices. Surely this perfect storm cannot continue, and as the famous saying goes, this too shall pass. But when and how is more of an unknown. So what are the events that led to this type of situation, and how could this play out? Here are my thoughts. First of all, I think employment has been the key to getting us through this. The government, no matter what side of politics you're on, has stimulated the economy and kept people in employment as much as possible. Sure, there's really heartbreaking stories around the country, but the majority of us are doing okay, thankfully. So I guess not falling off a cliff and having that jobs growth has been quite good and quite reliable. The next thing is demand. That's one side of the equation. Demand's critically important because demand is actually skyrocketed. Why has that happened? Well, look, firstly, Australians spend a lot of money overseas, up to $60 billion, and they haven't been able to travel and do what they probably normally do. So there's a lot of money being saved. We're at record levels of saving around the country, and we're paying off huge amounts of credit card debt as well. So that's a key factor. So now, with that in mind, we're also looking at relocating or investing in buying houses or upgrading our homes. There's been stimulus and things like that as well. So demand in some locations has actually doubled from this time last year, and that's quite incredible. So that's the first part of the equation. The other part of the equation is supply, and this is the interesting part as well, because while there's record amounts of high, there's unprecedented low levels of supply. We're probably around 20% around the country. I know some areas are upwards of 30 or 40, and it's quite incredible because I guess people are a bit reluctant to put their properties on the market given the situation and things like that, but that's just causing the perfect environment and, as we say, the perfect storm for capital growth. Huge levels of demand and very low stock levels. So how's this going to end? How's it going to play out? Well, 18 months, as I mentioned before. I don't think interest rates are going anywhere for the next 12 months, especially given we've just had another lockdown. So that's not going to happen. APRA's not going to step in at this stage. I know investors are just starting to take over from first home buyers, and they're at around 30% of buyers at the moment. And APRA only really start to worry once they get back to that long-term average of around 37 to 40%. So at this stage, that's off the cards as well. The other way it could happen is naturally. And I think that'll start to happen throughout the next 12 months. There'll be more stock levels coming on. People will lose their appetite for buying property, and those orders would have been filled. But there's a lot of pent-up demand at the moment. So as I said before, I don't see anything changing for the next 12 months. If anything, I think growth will still continue. It will not be as rapid. I think it'll probably come down. It'll probably come down from white hot to red hot, as a lot of people are saying. But I really think 2023 is when a number of these factors will probably play out in slower markets. So still a good time to get into the market. There's plenty of good opportunities out there, but it's really important to understand what you're looking for. Thanks for watching.